How's everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be talking about peer-to-peer, P2P payment fraud. We're going to be talking about some of the kind of typical instances of that type of payment fraud. Why has that payment fraud increased so dramatically over the last couple of years? Why is it projected to continue to increase dramatically? We're going to talk about some of the things that you can do to prevent that. And then we're also going to talk about a recent industry group that has come about that is basically trying to propose some ways that we might combat that type of fraud. So with that being said, let's jump into an article here. So this is from the PCBB. This is their BID daily newsletter, and this is P2P fraud. Payment fraud is on the rise and how to combat it. So, and it goes in here to state that the launch of PayPal in 1998, along with other growing adoption of mobile technology, ushered in what has become one of the most popular forms of payment today, peer-to-peer or P2P payments. As with each new type of payment option, P2P payments offer both benefits and risks to consumers and community financial institutions. Roughly 2/3 of smartphone users in the U.S., or about 170 million people, will send P2P payments in 2024. And this is projected to increase to 3/4 of smartphone users, or nearly 200 million people, by 2028, according to a forecast by eMarketer. Total P2P transaction volume in the U.S. is projected to increase from 1.4 trillion in 2023 to 2.3 trillion by 2026. And we can see here in this chart, and I thought this was a great chart because you can see here, so it starts at 2024, then goes 25, 26, 27, 28. And you can see here that the red line at the bottom, this is the number of smartphone users. So you can see here, we're going up 68, 70, 72, 73.6, 74, basically almost about 75%. So 3/4 of cell phone users, and then millions, just here, the number of users, 169 million, 177, 184, 190, 196, so almost 200 million smartphone users will use some type of peer-to-peer, payment transaction, whether it be through the Zelle network or through Venmo, which are the two most popular ones. But now let's get down in here to ripe targets for fraud. So the main aspects of P2P payments that make them so popular, which is convenience, speed, and accessibility, also make them ripe targets for fraud. Consumers love the fact that they can transfer money to friends instantly with just a few clicks. Unfortunately, so do thieves and fraudsters, who find it relatively easy to assume others' identities and steal these fund transfers. Around 8% of banking customers reported being the victim of P2P payment scams in a 2023 report by J.D. Power. While still a low proportion, this number will likely increase as P2P payments become more common and scammers become more versed in their tactics on these platforms. More concerning are the losses consumers have reported. The Federal Trade Commission, the FTC, reported receiving around 65,000 consumer complaints about P2P fraud payments, with consumers suffering 210 million in losses in 2023. These losses have been climbing steadily each year, with 2021 data reporting 130 million in losses and 2022 losses totaling 163 million. So, and this is important. The irreversible nature of P2P payments make getting stolen money back especially difficult for consumers and challenging for community financial institutions, which often were not even involved in the fraudulent transactions. So, and that is very key to understand. When they're great, as they say here, they're great because of the convenience, the speed, and accessibility, but they also are a major headache if you accidentally or you get conned into basically sending a money transfer. That money is most likely gone, and it is very, very difficult in most instances to get that money back. So okay, so what are some of the common P2P fraud scams that we're seeing out there right now? So we have unauthorized money transfer. So these occur when thieves transfer money out of a consumer's P2P account without permission by stealing their login credentials, often by using phishing tactics. Thieves usually act quickly and sometimes even change account settings, which make it hard for victims to stop the transfer and recover their money. Accidental fund transfers. In this case, thieves send messages to consumers saying that they accidentally transferred money into their account and ask them to send it back. The victims believe the request is genuine and send the money back, not knowing the money from the supposedly mistaken transfers came from stolen sources or fake accounts. Once the victims transfer back the original funds clears, the thief claims the first transaction is fraudulent and the app reverses it, leaving the victim with a loss in their account. So very, very interesting one there. Imposter fraud. This scam occurs when thieves trick victims into thinking they're dealing with a legitimate institution, such as the P2P platform or their bank. Posing as representatives of a familiar institution, fraudsters tell victims that there is suspicious activity in their account and they need to send them money to verify their account or reverse a transaction. The money actually goes to an account controlled by the thieves. And then finally, we have fake product purchases. So with this scam, fraudsters posing as sellers advertise products on popular online marketplaces like eBay and Etsy. Before shipping products, they request payment via a P2P app. However, the products purchased don't exist and the thieves simply pocket the money. So there you have it. So we have unauthorized money transfers, we have accidental fund transfers, we have imposter fraud, and then we also have fake product purchases. So and then the article goes on to say, like, you know, there's a balancing act. You know, P2P platforms and CFIs face a balancing act when it comes to monitoring for fraud and identifying fraud exposure while providing the convenience and speed consumers expect from the P2P payments. The urgency is greater when you consider that global P2P payment volume is expected to hit 5 trillion by 2028, according to a study performed by Vantage Market Research. So successfully combating P2P payment fraud will require CFIs and consumers to work together collaboratively. CFIs can be more proactive in educating consumers about the risks of P2P payment fraud, and steps they can take to protect themselves include the following. Confirm identity of recipients. You know, consumers should confirm and double check the name, phone number, email address, and other identifiers of recipients before hitting the send button on any P2P funds transfer. Set up account alerts. These will notify consumers via text or email immediately whenever a P2P transaction is initiated on their accounts, so they can take quick action if the transaction is fraudulent. Use multi-factor authentication. Safeguard your personal information. And then finally, keep P2P apps updated. So again, I thought this was really good. I thought this was a really good article, just talking about just the volume of P2P payments, a lot of the different types of fraud that's going out there, some of the things that you can do to combat this. But then also, let's take a quick look. This is real interesting. So this is a industry group that has popped up, basically working kind of with the Federal Reserve. So industry work group issues scam information sharing recommendations. So building on this summer's launch of the scam classifier model, a new tool to help improve scam reporting, detection, and mitigation, an industry work group has developed recommendations for further consideration by the payments industry on ways to provide scam intelligence across payment rails. The Scams Information Sharing Industry Work Group was launched in June of 2023 with administrative support from the Federal Reserve. The group consists of 30 fraud prevention and payment experts from across the U.S., released in August 2024. This group's report, Scam Information Sharing Industry Work Group Recommendations, which recommends that the industry consider a solution or establish an independent information exchange framework to provide a single source for scam intelligence across payment rails. The report also includes ideas about how to establish the proposed exchange framework and how it might evolve into the future. So, and then there's kind of a statement from the Federal Reserve that says the Federal Reserve has supported this industry work group and others over the years to draw attention to and encourage action on addressing scams and other types of fraud. So, so I have a link in the description below to the Federal Reserve's, basically this is kind of like the FedNow website. This is the frbservices.org website. You can find a lot of good stuff on here. But I have a link, link to this article here. And then if you through the link, you can click on, you can go to this kind of working group, which is also on this website, if you will. So you can kind of click on that and see what their proposal is for this. And then I will also include a link to the original article here as well. So, so again, something to be aware of, and I would just point out real quick as we wrap up on this one that, the Zelle payment network, which is owned by a company called Early Warning Services. And that company is owned by, the 5 or 6 largest banks in the country. And they have had a huge amount of fraud on the Zelle network. And basically, some of the regulators the CFPB have really been kind of hammering them, basically to say, okay, what are you doing? Are you reimbursing customers? Are you trying to prevent the fraud? Are you trying to cut down the fraud? How are you doing that? So there's kind of a big ongoing discussion with that, and Venmo, of course, being the largest P2P platform, is also involved in that conversation as well. So I just say that just to say that, hey, there's a lot of things evolving, more stuff to come on this undoubtedly in the future, but if you are using one of these payment platforms, just be careful. Just be careful what you're doing. Just like I said, just double check what you're doing. Make sure that you are sending payments to the right people. Confirm with them after you've sent your payments. And then if you start receiving weird payments, just double check on that. Call. Get in touch with the app. Get in touch with your bank. Try to confirm what's going on before you do anything. Those are always just some of the best practices, and make sure to try to safeguard your information in all instances. So, okay, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember, we are on YouTube, Rumble, and all major podcast platforms. Please leave your comments down below, as I always love to get back to everybody, and I will see everybody again real soon. Thanks a lot.